Welcome back to the show, everybody. Check it out. It's Hinman, and he's doubling down. We've got that for you. Is Ripple moving to London? We're going to get into it. The Fed says next stop, instant payments. We got David Schwartz on the Terra Luna collapse. We're going to talk about that and maybe what the solution is as well. And we're also going to talk about XRP price. It's up over 16%. Is the bottom in? Somebody roll that beautiful intro so we can find out.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at Dig Perspectives at the top of the screen. Everything that we're talking about here today, it's $1.370 trillion market cap. We are up 5.8% this morning. Good morning. It's May 13th, 2022. Bitcoin right now, 30,500 plus. Ethereum, 2,100 plus. Number 6 spot, XRP now climbing back to 43 cents right now. We're up 11.9 on the 24 hour, and it was 14 to 16% this morning, so excuse me in the header for misstating that. So we are ranging right now between 37 and 47 cents. Right now, pulled back to 43. We will keep an eye on it. You know, when it comes to XRP, even at 43 cents, even at 37 cents, even when I bought it at 13 cents, I still believe XRP is the bridge token that will be used and adopted widely across the world, and certainly the protocol XRP Ledger, even here in the United States, regardless of the lack of clarity now. It's not financial advice, but my digital perspectives. I do believe this bridge currency can be 4- and 5-digit token. My personal thoughts. Take a look right here. But this is what people think of us when they hear us talk about XRP. We think of ourselves sounding and coming off like the Dalai Lama himself. But what people actually see when we talk about XRP, it's this. And it is. And that's why I do diversify into my portfolio. You guys know I do many things to diversify, one of which is right here. It's Masterworks. For the first time in my life, I can buy into blue chip invested art. And I'm going to tell you something, commoditized art, $20 a share. You don't have to be a billionaire to do this, but you can invest the way the billionaires do. And as I always say, I love stacking my pennies next to their dollars. And I can tell you that most of these works are outperforming the S&P in their similar portfolios to these artists. It is remarkable as an opportunity. Link underneath the video. Now look at this. Warren Buffett and Charles Munger just said not long ago, and they've said it many times, that they think crypto is trash and Bitcoin is certainly trash, and you couldn't get them to give you all the Bitcoin left for $25. However, they're invested in Nubank, and they want you to be able to get it. Launches crypto trading, holds Bitcoin on the balance sheet. Yeah, so they may think it's trash, but they want to sell it to you through Nubank. How about that one? Ron Hammond says, I can't stress enough how important DC engagement is after this week. Stablecoins were center of attention for Congress before that. Largely excluded algorithmic stablecoins. That has changed. Secretary Yellen repeatedly testified that Congress should create a bipartisan framework. I'll tell you what else she said, too, because I played it on this morning's show. If you didn't hear it, go watch that video. And I actually have something for you to see here in just a second. But, she said lots of things. But the question now is what's going to happen to Tether? Now, Tether is not an algorithmic stablecoin, but Linda P. Jones and Crypto Whale capture this in this tweet, and that there was a flash crash sometime here early this morning that none of us were aware of, and it went down to 1/1000th of a penny and then quickly recovered. Uh-oh. Is there more to come to all of this? And speaking of more to come to all of this, when it comes here, this is TAG, who's an incredible influencer out here. It says Andreessen Horowitz account interacting with MakerDAO, the one the SEC deemed a security but took no enforcement action on. Yeah, we remember that one. Yeah, this dates back years, but he shows us here the different investors that are involved. And we have someone from A16 there, someone down here from A16 as well. And if you go over to here, he has even more listed here, and then you see there. Right. So, what it really comes down to is a question that I asked not long ago here. And it really comes down to Ethereum always gets a free pass. Right. It always gets a free pass. How is it Ethereum and the projects tied to it, like DAO, MakerDAO, and DAI token, how come these things always seem to get through? Is it because William Hinman got $15 million worth of reasons? The question remains here. But one thing's for sure is you're about to hear William Hinman double down on the fact that Ethereum is not, in his mind today, from just a few days ago at Stanford Law School, speaking in this webinar here. Listen to what he says with a member of A16Z here and the general counsel of, what was it? DAI told us. So let's see right here. Yes, there it is right there. Shout out to DAI for this one here. Remember when Rosalind Layton told us that Rebecca Reddig actually is the general counsel at Aave? Another Ethereum connected and tied project that gets to lend and do its lending program, but then Coinbase was threatened to be sued over theirs. Remember that? Well, here's Hinman doubling down all over again. Take a listen.
One of the things that you need to think about is, in terms of those various factors that Miles is highlighting, is, are you concerned that what you're doing with your DAO at the moment might raise SEC scrutiny? DAOs in some respects have been attractive because folks have really latched on to something that we had articulated back in 2018. If you have an organization where there's not an identifiable active participant or sponsor or third party that's really directing how the DAO's success might go, then you might not have something that gets regulated as a security. And back then we said, Ethereum had reached the point, even though it's not a DAO, but Ethereum had reached the point in terms of an investment in a token that did not need to be regulated as a security because there wasn't a central party sort of directing the activities, and people weren't relying on a central party to deliver them a return, which is one of the keystones of whether or not you have a security.
Well, it's quite interesting, right? And then we got a response from John Deaton here. It says, remember, Hinman said a token can start out as a security, then transition to no longer being a security, but later return to being a security. He's already collecting his pay for the 2018 free pass. He might need another $15 million. E 2.0 should be hoping Ripple crushes the SEC. Oh, brother. I tell you, it just doesn't get any stranger. It'd be a lot funnier if we weren't all really suffering and losing due to this man's inconsistency in his ruling and judgment at the SEC, and then having private gain while being in that public office, right? Certainly would be. You got to throw Jay Clayton in there too. But this right here is a fast clip, a highlight reel, if you will, of Janet Yellen getting grilled here. And you're going to want to see this because I tell you, there's some inconsistencies coming out of the Treasury now. Take a listen.
The FSOC should step in to designate various stablecoin activities as systemic risks, which would jumpstart administration-wide regulatory rulemaking.
Listen.
Secretary Yellen, has the FSOC officially designated digital asset or stablecoin activities as systemic risks?
No, it is not done so.
Thank you.
No, it is not done so. Take a listen.
I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need.
There's risks to financial stability, which does make it, in fact, a systemic risk. But we're not done. Keep listening.
Need a framework that's appropriate.
This is under Treasury Secretary for the U.S. Treasury, working directly underneath Janet Yellen, being pinned to the wall by Elizabeth Warren for the purposes of the Biden administration's objective to absolutely weaponize FSOC so they don't have to do their job, which is exactly what I told you when I first covered this in February. We're over the target, ladies and gentlemen. Listen to this.
Let me remind you what my question is.
Oh, do please.
Do they pose the threat of becoming a systemic risk?
Of becoming a systemic risk, yes.
Yes, they do. I agree.
So they agree. It is a systemic risk, right? And yet she says here it isn't, but she said it is a risk to financial stability in the previous clip from just a day or so before this. You know, this is really questionable on Janet Yellen's part, and certainly of the Department of Treasury, who are now in absolute contradiction of one another. There you have it right there. It is problematic. I think they're against the wall here. Now, let's take a look at some international information here just very quickly, because we got a lot, and we're about to hear from David Schwartz on the Terra Luna debacle. And will Ripple be moving to London? We're going to get to it. Israel's central bank has received public support, potential plans to issue a digital shekel, CBDC, on grounds it would help the economy by supporting innovation in the payment system, reducing the amount of cash and bolstering the fintech sector. It's all headed that way. And the Federal Reserve says, you know what? Next stop is instant payments. Instant payments pioneers are on fast track. Is your financial institution ready for the ride? We all know that Ripple is highly involved and tied into the Federal Reserve Faster Payments Council. Take a look right here. Ripple could be the best solution for central banks likely to adopt CBDCs soon. Well, I think that's absolutely accurate. And when it comes to platforms that are designed to implement CBDCs, there are only a few choices, with Ripple being at the top of the list. And that's absolutely true. Shout out to 432 and ProCoin News for this. You know, I wanted to set this up because what we're about to go into here, because we're going to see the domestic agenda with the Federal Reserve, next stop instant payments, to right on to the international objective and narrative. They're all in complete alignment now. And I tell you, you have to think, and I've said this before in a video or two, and I want you to really take this in. With the crash that we just went through, because XRP has real use case and real utility for payments, the companies and entities that use it for payments, they're not holding it for gain. So they don't care what it costs per se. So the reality is that the transaction cost for them to continue to use it today, whether it was at $1 or more, or whether it's at 30 some cents, it didn't cost them any more or any less. That is a key point for understanding the use case of XRP and why this crash doesn't matter to the actual market participants. Take a look right here. This is a clip from what I covered the other day, but it's a different segment from the IMF Managing Director, Kristalina Georgieva, talking about destiny, where we're going here. This is the final piece to the puzzle. Take a listen.
We have talked about digital future. Sorry to bring it to all of us, but the future has arrived. And we all are now striving to make the best out of it, because not only it has arrived, but it has arrived on steroids. If you look at the speed with which CBDCs are picking up, we have done a survey. Over 100 countries are at different stages of CBDCs, or what is happening in universe of stablecoins, or what is happening in the crypto asset universe. We clearly have a lot to deal with. I would like to concentrate on one issue, and it is how we do it with regard to cross-border payments in a world of growing fragmentation.
There you have it right there. And I think you do it by using a set of protocols that are highly interoperable, tying everyone together for financial inclusion. Take a look right here. This is a great clip. I'm not going to play the clip here because I don't want to get this too long, but they're talking with Jeremy Allaire from USD Coin, which I firmly believe is the unofficial U.S. retail digital dollar, and maybe even more for the United States of America, but we shall see. And he is commenting on the collapse, and basically that the yields that were being paid and all of this behind the Terra Luna collapse were really a stage for disaster, and it's been in play for a while. He makes a great points about USD Coin being highly regulated, and obviously it sets it apart, and it has not had any issues staying to the peg at all. Now, this is David Schwartz right here. I want to highlight this because he comments on the Luna run as well. He says, I think the fundamental problem here was that the Luna system's only value driver was a stablecoin. There was nothing else to the ecosystem, and there was no way that could justify or sustain the huge Luna valuations. So a bubble popping drove system into death spiral. I think that's such a quick and concise way of putting it. And this is why I've always been fascinated by November's report by the World Bank, ladies and gentlemen, because look, the world is having the case made that private stablecoins are ineffective, they're vulnerable, and they're not regulated properly, and they are fit for disaster. Is that not the message? Of course it is. And it's always fascinated me that the World Bank calls Ripple XRP and Stellar Lumen XLM, both stable coins, offer instantaneous processing and security of payments as many cryptocurrencies do. It says they offer stability with respect to parity against the fiat currencies. The two digital currencies that fall into this category are RippleNet's native Ripple XRP and Stellar Networks XLM. Don't believe it, it's still true. And to David's point, I have to add in, because he pointed out that there's only one thing backing that stable coin, and that's why it crashed. And understanding that with Ripple XRP, at least, what do we know? I'll tell you what we know. We know that the XRP Ledger is a decentralized exchange for the world. So you could put everything of value on there. You could put a certain collateral of gold, of fiat dollars, of oil, of diamonds, tokenized and digitized, and the metals market itself beyond gold. And you could even put soft commodities collateralized on the ledger. And then, bonds, right? You name it. And doing this creates a more stable coin that maybe even someday could serve as a global stable coin. Because in order to wreck that particular stable coin, should the U.S. Treasury give it such a designation, you would have to wreck all of those different assets. And if you wrecked them all at once, it may just mean the end of the world, really. I hate to say it, but look here. This is a clip from London, and London's mayor right here meeting with more businesses to bring capital from the U.S. Look closely. It's rather timely. You're going to see Chris Larson in two of these quick clips, and he just happens to be there too. I said, hey, Chris, should we send boxes for a move? I think Pompliano has a bunch left over from that pizza box campaign that we could use. Take a look.
The focus of this trip, though, is money.
That's Chris Larson right there. Boom.
Good to see you, sir.
Next stop,
good to see you.
Billionaire round table.
And that's Chris Larson right there. And they're all hanging out because London wants to draw them over.
London have a lot in common.
Fair to say these tech big hitters could lose $1 million down the back of the sofa and barely notice. The aim? To prize investments away from the Bay Area and over to its biggest tech competitor, Silicon London. The view may be more spectacular, but in truth, more and more venture capital has been flowing London's way in recent years. And the mayor promises as more and more investment comes, tens of thousands of jobs will follow.
They sure will, and you have to wonder because he is targeting, London's mayor is targeting big tech investors. So will this just be something for Chris to do on his own independently, or is he there actually talking for Ripple? More to come as it comes in. Take a look right here. You also have to wonder really quickly, is that actually more leverage to get this case done, to stop the delay by the SEC? To really threaten and take steps to really look towards moving outside of the U.S.? It may just be. At any rate, let's take a look at this because this is from Dark Defender. It says the markets are in blood red. They sure are. A little green today, though, however, and it's welcomed. We discussed 22 cents 3 months back, and XRP is close to that level in the 30-some cent range it was yesterday and last night. Are we still in the storm? We don't know. But he did put this out on February 27th, and I find that to be pretty damn remarkable. And we'll have to see, do we actually go from this all the way down to the 22 cents? Will it sell off again? I don't know the answer, and I never have pretended to. But I know one thing. It helps us to be aware of what these technical analysts see, whether they be right or whether they be wrong. They become points of observation for me. And that's what I'm paying attention to now, whether we will see another sell-off and go down and hit that 22 cent mark. And if he hits that, and we hit that, and then look, if he's right on the 22 cents, I'm hoping like hell he's right on the $11 and $197. We shall see. I don't know where it stops. This is crypto. Head on a swivel. Nobody knows where it goes. I appreciate each and every one of you and Dark Defender and Coins Kid and all the other technical analysts out there. That's going to do it for me. Not financial advice. Head on a swivel, folks. Is Ripple going to London? I'll catch all of you on the next one.